Stars, hope you're all doing amazing. We have gathered here for CA Final SCMPE revision series. I always tell it is all about the perspective. We always keep telling SCMPE is scary. Is it? No. I always tell SCMPE is scoring. So from SCMPE is scary to SCMPE is scoring. The bridge is what we are going to develop here. We'll be looking at the concepts. We'll be looking a quick overview of all questions of the study material, all practical questions of the study material. We'll be having a look at all of those. And today we are going to begin with the chapter decision making. So let us begin the chapter decision making, students. So we have already used the technique of marginal costing in our CA Inter as well. So we know the basics of decision making. Yes. So marginal costing is the technique which is used for decision making. Now, what is marginal costing and how do we take decisions based on marginal costing? Let us understand with the help of small, simple stories. So this is Ramesh, this is Suresh. Both of them are CA students. They decided, let's take a room. Let's take an apartment for rent. Let us stay together and study. So the rent was 6,000 rupees. Both of them are sharing. So it comes to 3,000 per head. Clear? Now, a third person joins in. Who's this? Kabab Mehdi. This is Mahesh. So he tells, bro, you guys are staying together. Yes. Can you accommodate me also with you? So the first question we'll ask is, how much will you pay? So we'll tell you, yes, 6,000 rupees it is. 3 people we are. So it comes to 2,000 per head. But it turned out that Mahesh is a kanjus. You guys know what kanjus is? You guys don't know what a kanjus is? Okay, kanjus means a miser. Okay, yes. So now he is telling it is 2,000 per head, but Mahesh is telling I can only accommodate to pay you 1,000 rupees, friends. Please try to make some adjustment. So 3 people are there. Per head cost is 2,000 rupees, but Mahesh is giving us only 1,000 rupees. Should we take Mahesh into the room? Should we not take Mahesh into the room? Tell me, students, should we take Mahesh into the room? Should we not take Mahesh into the room? Everyone, yes, tell me, should we take Mahesh into the room? Should we not take? Yes, why? What's the reason? Tell me. Some people are telling no, some people are telling yes. Yes. On the outside, it feels that we should not be taking Mahesh into the room. Why? Because per head cost is 2,000 rupees, but he's giving us only 1,000 rupees. But if we look at it properly, look what happens. The total cost still remains 6,000. So if Mahesh is giving us 1,000 rupees, the balance amount we need to pay will be 5,000, which comes to 2,500, 2,500. So they agree. So what happens? Initially, how much they are paying? Ramesh was paying 3,000, Suresh was paying 3,000. The total rent was 6,000. If Mahesh comes, the total rent will still remain 6,000 rupees. But now Mahesh is paying us 1,000 rupees. So only 5,000, the balance 2 friends need to incur. So it comes to 2,500, 2,500. So previously they were paying 3,000. Now they are paying only 2,500. So they can save 500, 500 each. So what is the lesson? Every time we are taking a decision should not be based on the concept of total cost. Decision should always be based on the concept of marginal cost. Look at what is the marginal cost here. How much extra cost we are incurring if we take Mahesh into the room. Previously also we were paying a rent of 6,000. Even now we are paying a rent of 6,000. There is no additional rent that we are paying. So the marginal cost is 0. But the marginal revenue, how much is Mahesh willing to pay us? 1,000 rupees. Marginal revenue is more than marginal cost. So we will accept the proposal. Is it clear, students? This is what marginal costing is all about. Now, moving ahead. Yes, a continuation of the story. Now, Mahesh asks, what do you guys do for food? So we tell, we take subscription for a nearby mess, which comes to 3,000 rupees per month. So Mahesh tells, I'll also join you guys. So he tells, can I pay you 1,500? Mess fees is 3,000 rupees per head. Mahesh is telling, I'll pay 1,500. Should we take him? Should we not take him? Mess bill is 3,000 rupees per head. Mahesh is only paying this 1,500. Should we take him? Should we not take him? Yes, we should not take him. We tell, yes. You don't have food at all. It's okay. Yes. So currently what we are incurring, yes, Ramesh is paying 3,000, Suresh is paying 3,000, totally is 6,000. If we take Mahesh also, the total mess fees comes to 9,000. 3,000 per head into 3 of us, 9,000. If Mahesh is paying 1,500, we need to take care of the balance 7,500, which comes to 3,750, 3,750. So we'll tell, yes, we will not accept the decision. Again, how are we taking the decision? Based on marginal cost. We are telling, if we take Mahesh, how much extra cost we should incur on a total basis? 3,000 rupees is the extra cost. But how much is Mahesh willing to pay us? He's only paying us 1,500. So let us not accept the decision. This is the crux of the entire chapter. Yes, you want one thing to know of this entire chapter. All decisions you are going to take it based on marginal cost. How much cost you are incurring because of taking the decision. Forget everything else. How much cost you are incurring because of taking the decision. How much revenue you are getting because of taking the decision. Compare and take a decision. Now let us have a look at our notes, the basics. The notes are already uploaded on Telegram channel, Think with Tabish. So if you want, you can get it from there. Firstly, decision making as a chapter. First, let's have a look at the weightage in the past examination. It is one of the favorite chapters of ICAI. 30, 20, 15, 25, 30, 15, 20. On an average, every attempt we have 20 marks. Most important chapter. First, let us have a look at the basics of decision making. What are we telling? All short-term decisions are based on the concept of marginal cost, marginal revenue. Look at marginal cost, we compare it with marginal revenue. So how do we take a decision? If marginal revenue is greater than marginal cost, what do we do, students? Do we accept? Do we reject? Marginal revenue is greater than the marginal cost. What do we do? Do we accept the decision? Do we reject the decision? Tell me, students, what do we do? Marginal revenue is greater than marginal cost. We accept the decision. Perfect. But if marginal revenue is lesser than the marginal cost is 3,000, marginal revenue is only 1,000 rupees. What do? We reject the decision. Now, what is marginal cost? Simply speaking, it is the change in cost due to change in the level of output. Because of change in output, how much extra cost we are incurring? Is the extra cost to manufacture 1 unit extra output. Yes, simply telling, if I'm manufacturing 1,000 units, my cost is 7,000. If I'm manufacturing 101 units, the cost is 7,050. So what is the marginal cost, students? How much extra I am incurring to manufacture 1 unit? It is 50. Is it clear, students? Now we are going to look at the basic formulae of marginal costing. We would have already discussed this in CA Inter. They are relevant for CA Final as well. So let's quickly have a look at the basic formulas of marginal costing. So again, let us understand everything practically with the help of few stories. So, two friends, they were roaming in the streets of Bangalore while all of a sudden they looked at this business opportunity. They looked at a wholesale shop wherein it was written, buy shirts at 600, sell it at 1,000 rupees. So they seemed to be very interested. They went there to see what is happening. They spoke to the people. They asked, what is the business all about? They tell, yes, you need to buy clothes at wholesale. We'll give it to you at 600. You sell it at 1,000 rupees. So once this happens, what is it that runs in our mind? Oh, one shirt, I'll get 400 rupees. Yes or no? Two shirts, I'll get 800 rupees. 10 shirts, I'll get, how much will I get? 4,000. 100 shirts, I'll get 40,000. So much money, I'll become so rich. Yes or no? That's what everyone thinks. So what is this? This is the concept of contribution. If we sell 1 unit, how much net cash will be left with us? If I'm selling 1 unit, I will be getting a revenue of 1000 rupees. But to sell this 1 unit, I need to incur a variable cost of 600. So by selling 1 unit, I will be having a contribution of 400 rupees. If I sell 1 unit, I get 1000, I have to pay 600, 400 net cash will be available with me. This is my contribution. Is it clear, students? So firstly, we've looked at contribution. Now, continuing forward. Yes. So they thought I'm having a contribution of 400 rupees per unit. Yes, it is a very feasible business. They started the business. Once they were planning to start the business, they realized till now we had only looked at the variable cost. We also have to pay fixed cost. Yes or no? So the fixed cost is 10,000 rupees which they have to pay. They're telling, okay, now for the time being, let us incur it from our pocket. Later on, we'll recover it. Okay. Right now, let us incur it from our pocket. Later on, we'll go on recovering this. So, what we do on every sale? Yes, first customer came. Yes, he purchased the shirt. We sold it for 1000 rupees. Our variable cost was 600. We are having a contribution of 400. Yes, we keep it aside. Yes, next customer comes. Again, a contribution of 400. Yes, contribution of 400. Contribution of 400. Goes on and on and on. So this is how things are going to be. First, in any business, firstly, to start the business, we'll be incurring a fixed cost. In our example, we have told the fixed cost is 10,000 rupees. After that, every sale happens. Yes, suppose customer X came. X came to us. He wants a shirt. We gave the shirt. We got 1000 rupees sales. Yes, to purchase the shirt, we had incurred 600 rupees. Our contribution by selling this one shirt is 400. One more customer came. Contribution is 400. One more customer came. Contribution is 400. This is the basic. Now, in marginal costing, we'll be looking at the marginal cost sheet format. Every question we'll be solving trying to use the marginal cost sheet format, all the basic questions. So what is the format of marginal cost sheet? We know the golden formula for costing. Sales minus total cost is profit or loss. Total cost, what all will it include? We'll be having variable cost, we'll be having fixed cost. So in marginal costing, what do we do? Sales minus variable cost we do. This amount, we give it a name called as contribution. From that, we reduce fixed cost. We arrive at profit or loss. Is it clear, students? Same thing, just that we have added a new name called as contribution. Clear, students? Now, I need to bifurcate my sales. What did I tell? Yes, if my sale is 1000 rupees, my variable cost is 600 rupees. Yes, if my sale is 1000 rupees, my variable cost is 600 and my contribution is a balance amount 400. Now, I want it as a percentage. So what do? I want it as a percentage. I'm telling variable cost. How much percentage variable cost is as a percentage of sale? How much percentage is variable cost? Well, we are looking at it as a percentage of sale. Tell me, students, how much percentage is variable cost as a percentage of sales? Yes, it is 60 percentage of sales. So I'll tell it is variable cost divided by sales into 100. This is nothing but the variable cost ratio is 60. Now I'm telling how much percentage is contribution as a percentage of sale. How much percentage it is, students? Yes, it is 40%. Amazing. So contribution is 40 percentage of sale. How do I get it? It is contribution divided by sale into 100. So this is called as PV ratio. PV ratio means nothing but how much percentage is our contribution as a percentage of our sale. Always we add variable cost ratio and PV ratio. The total will always be 100% because variable cost plus contribution, eventually it will give us the same. Clear till now? So let us have a look at what all we've seen using our notes. Firstly, contribution. It is the amount which contributes towards recovery of fixed cost and profit. That is, it is excess of sales over variable cost. So I can tell contribution is nothing but sales minus variable. If I sell a shirt, I get 1000 rupees. To purchase, I've incurred 600 rupees. So by selling one shirt, I'm getting 400 rupees. Contribution, I can also get it as fixed cost plus profit. Now, how did we get this formula from? Look at marginal cost sheet. Sales minus variable cost. We've told it is contribution. Again, from variable cost, if we reduce fixed cost, only then we'll arrive at the profit. So if you look at this portion, we have contribution minus fixed cost is equal to profit. Therefore, contribution is equal to take fixed cost to the other side, fixed cost plus profit. So there are two formulas. First is contribution is sales minus variable cost. Contribution is also equal to fixed cost plus profit. So this is the concept of contribution. Contribution means right now, if I make one sale, how much net cash I will have. Yes or no? I sell one shirt, I get 1000 rupees sales, I have to pay 600 variable cost, net 400 cash will be left. I sell one more shirt, 400 more cash will be left. One more shirt, 400 more cash will be left. This is what contribution is. Next, variable cost ratio and PV ratio. We have told we have a selling price of 1000. We bifurcate it as we have a variable cost of 600. We have a contribution of 400. So how much percentage is variable cost? Is 60%. That is variable cost divided by sale into 100. How much percentage is contribution? Which is 40%. We get it as contribution divided by sale into 100. This is nothing but variable cost ratio. This is nothing but PV ratio. So both of them are compared as a percentage of sales. Variable cost ratio, it is the proportion of variable cost to sales. And PV ratio, it is a proportion of contribution to sales. Both of them are complementary. That is, the total of both variable cost ratio plus PV ratio will always be equal to 100%. So if I know my variable cost ratio is 70%, I can directly tell it means that my PV ratio is 30%. Is it clear, students? Yes, everybody is excited. Should we continue? Should we continue, students? Next, we are moving into the concept of break-even point. Break-even point. Again, two friends are discussing. They're telling, yes, we made an urgency while taking a decision. We thought that we will purchase at 600, we will sell at 1000. Our profit is 400, but our profit is not 400. Initially, we have to recover this fixed cost of 10,000. Yes, sir. So they're thinking, how many shirts should I sell so that I can recover this fixed cost of 10,000? They're telling, yes, we initially thought if we sell one shirt, it was my profit of 400. Later, we realized it is not profit, it is just a contribution. From this, I have to recover my fixed cost also, I have to earn my profit also. So, yes, the other person is just concerned. One shirt, 400, two shirt, 800, too much money. Now we are thinking, yes, if we sell one shirt, we get a contribution of 400 rupees. To pay our fixed cost, how much we want? We want 10,000 rupees cash in hand. I've told you, if I sell one shirt, net 400 cash I'll have with me. Yes, to recover our fixed cost, I want a cash of 10,000. So at the next time the landlord comes, I can give it to him. So how many shirts should I sell? How many shirts should I sell, students? If I sell one shirt, it is 400. Two shirts, it is 800. Three shirts, it is 1200. Five shirts, it is 2000. So how many shirts should I sell to reach my break even? No profit, no loss. It will be 25 shirts. Yes or no? So cross multiplication. 10,000 rupees on total I want to absorb. For every shirt, I am getting 400 rupees per shirt. So I'll tell I have to sell 25 shirts. This is my break even point. I will tell, yes, I'll prepare my contribution bucket. So every sale I will take 400. Every sale I'll take 400. Third sale 400. Like this, if I sell 25 shirts, I'll be having 400 into 25, 10,000 rupees with me. From this, I can pay my fixed cost. So I will reach my no profit, no loss situation. I will not be making profit. However, I will not be incurring loss as well. So how do we get it? Break-even point in terms of units, it is fixed cost divided by contribution per. So break-even point is nothing but fixed cost divided by contribution per unit. Is it clear, students? Break-even point is, what is break-even point? It is a situation of no profit, no loss. We have told, yes, forget profit. We have begun our business. We have paid 10,000. At least I want to absorb that 10,000. I want to recover that 10,000. So how many shirts should I sell? That is, my entire fixed cost is recovered. At BP, profit or loss will be zero. Total sale will be equal to total cost. That is why profit or loss is zero. Contribution is fixed cost. Contribution is equal to fixed cost. Remember, I have told you contribution minus fixed cost is profit or loss. So if profit or loss is zero, then contribution should be equal to fixed cost. So how do we get BP in terms of units? We tell total how much we want to absorb. Total to pay my rent, I want 10,000. It is fixed cost. On every sale of shirt, how much do I get? It is contribution per unit. This is break-even point in terms of. Is it clear? We also have BP in terms of sale value. Firstly, how do we calculate BP in terms of sale value? Simplest thing, we know that to arrive at our BP, we have to sell 25 shirts. We know that selling price of every shirt is 1000 rupees. So how much rupee sale should I make so that I can arrive at break even point? How much rupee sale should I make so that I can arrive at break even point? Tell me, students. Yes, 25,000. Yes or no? It is 25,000. So how do I get it? It is BP in terms of units. How many units I'm selling and what is the selling price per unit? So I'll tell it is 25 shirts into 1000 rupees per shirt, 25,000 rupees. Now based on this, how do we derive the formula? Just pay attention for 1 minute. BP in terms of units is fixed cost divided by contribution per unit into selling price. In maths, we have one thing. So if we have A by B into C, we can also tell it as A divided by B divided by C. So I can write it as fixed cost divided by contribution per unit divided by selling price. Okay, you don't believe in maths, let us try it manually. Okay, first, okay, 1 divided by yes, 1 divided by 5 into 4. A divided by B into C. 1 divided by 5 into 4. That is equal to 4 by 5, which comes to 0.8. I can also write it as 1 divided by 5 divided by 4, which comes to 1 divided by 5 by 4 is nothing but 1.25. So 1 divided by 1.25 also gives you 0.81. So it is correct. So what we are telling, same thing. Fixed cost divided by contribution per unit into selling price. I bring selling price to the denominator. I tell it is fixed cost divided by contribution per unit divided by selling price, which comes to fixed cost divided by contribution per unit divided by selling price. My contribution is 600 when my sale is 1000. 60%. What is this? This is my PV ratio. So BP in terms of sale, BP in terms of rupees is nothing but fixed cost divided by PV. Is it clear, students? This is the derivation of the formula. Now, if you want to know the formula simply, is shortcut, look at this. I'll tell you. What is our PV ratio? Our PV ratio was 40%. Yes or no? In our example, our PV ratio was 40%. 1000 was the sale, 600 was the variable cost. 40% is our PV ratio. Yes, so what is the meaning of this 40% PV ratio? It means that if I am making a sale of 1 rupee, I will be getting a contribution of 0.4 rupee. Okay, so if I'm making a sale of 1 rupee, 40% of that 0.4 will be my contribution. Now, to arrive at BP, how much contribution I want? I want a contribution of 10,000 rupees because I have to pay 10,000 rupees fixed cost. So, how much a sale should I make? Cross multiplication is 10,000 divided by 0.4. 10,000 divided by 0.4. How much is it, students? It is 25,000. And how did we get this? What is 10,000? It is fixed cost. What is 0.4? Is PV ratio. So BP sale in terms of rupees, it is nothing but is fixed cost divided by PV ratio. Yes, these are the basics. So trying to go a bit fast. So break-even point in terms of units, it is fixed cost divided by contribution per unit. In terms of sale value, it is fixed cost divided by PV ratio. If you want to write it together, you can just write it. It is nothing but fixed cost divided by. You divide by contribution per unit, you get it in terms of units. You divide by PV ratio, you get it in terms of sale value. Next thing that we have is the concept of margin of safety. So initially what we thought, if we sell one shirt, we'll be getting 400. Later we realized we have to recover this fixed cost of 10,000. So we told if we sell 25 shirts, we'll be in a position to recover our fixed cost of 10,000 rupees. Suppose in a period we have actually sold 100 shirts. So what will we tell? Initial 25 shirts, it was required for me to recover my fixed cost. Yes, after that I've recovered all my fixed cost, all my commitments I've paid. After that, whatever extra sale I'm doing, whatever 75 extra shirts I'm selling, that is a complete profit for me. Yes, maze karenge, yes or no? So whatever is the sale over and above BEP sale, it is called as margin of safety. Margin of safety means how much sales you are making over and above the BEP sale. Look at this. Two of them are thinking. First 25 shirts we sold, we made a sale of 25,000. Extra 75 shirts we told. Yes, our margin of safety is 75,000. Total in a period we have sold 100 shirts, our total sale value is 1 lakh. Now, what is happening? Contribution. Every shirt we are selling, we are getting contribution. First shirt we sold, we got 400, 400, 400. Like this 25 shirts we sold. 25 into 400, 10,000 rupees. The first 10,000 that we received, what do? Yes, we have a landlord waiting for us. Yes, so we'll pay him. Ja, जी ले अपनी जिंदगी. Yes or no? Go live your life. 10,000 fixed cost we have paid. Now both the friends are happy. They're dancing. All commitments we have paid. Whatever over and above, even if one customer comes, we sell, we get 400 rupees. That will be our profit. So whatever over and above contribution we are earning, over and above we have sold 75 shirts. So on 75 shirts into 400 per shirt, how much is it, students? 75 shirts into 400 per shirt, 30,000 rupees will be our profit. Yes, so we'll tell total sale 25 plus 75, total 100 shirts we are selling. Total sale, we'll bifurcate it as BEP sale, MOS sale. Yes, and if we multiply the sale into PV ratio, we'll be getting the contribution. So total sale into PV ratio will be getting the total contribution. What all we will have in our total contribution? We told contribution is nothing but fixed cost plus profit. So we'll tell in our BEP sales, whatever is the contribution we'll be getting, it will be equal to our fixed cost, 10,000 rupees fixed. But over and above whatever we are making the sale, whatever is a contribution we will earn, that will be equal to our profit. Is it clear, students? So what we are telling, look at this. Firstly, yes, total sale into PV ratio will give us the total contribution. Suppose my total sale is 1 lakh rupees. I'm telling my PV ratio is 40%, so my total contribution is 40,000. Telling 1 lakh is my total sales, 40% is my PV ratio, so 40,000 is my total contribution. This total sale, I'll again bifurcate telling In this total sale, I have BEP sale of 25,000. I have MOS sale of 75,000. Again, in this total contribution, we'll be having fixed cost and profit. We'll tell I have fixed cost of 10,000 rupees. I have profit of 30,000. What we'll tell is BEP sale into PV ratio. If we do from our break-even sale, whatever is our contribution we will get, that will be used to recover our fixed cost. But over and above that, from our MOS sale, whatever is the contribution we'll get, that will be our profit. Is it clear, students? Any doubts? Let us look at our notes as well. Margin of safety is a sale over BEP sale. We start earning profit from our margin of safety sales. We have an extra concept called as BEP and MOS sale ratio. Suppose I am telling my total sale is 1 lakh. From this, my BEP sale is 25,000. My MOS sale is 75,000. How much percentage is my BEP sale when as a percentage of total sale? How much percentage is it, students? It is 25%. How do I get it? It is BEP sale divided by total sale into 100. BEP sale percentage. How much percentage is my MOS sale as a percentage of total sale? It is 75%. MOS sale divided by total sale to 100. Yes or no? This is BEP sale ratio and MOS sale ratio. Both are complementary. If you add both, you should always be getting 100%. Clear? So we are telling we start earning profit from our margin of safety sales. Till BEP, whatever is the contribution we were earning, it was used to recover the fixed cost only. BEP sale ratio, it is proportion of BEP sale to total sale. MOS sale ratio, it is a proportion of MOS sale to total sale. Both are complementary. That is, if you add BEP sale ratio plus MOS sale ratio, you'll always get 100%. Clear? Again, one more thing which we did. Sales into PV ratio give us the total contribution. Total sale into PV ratio give us the total contribution. Bifurcated telling total sale. We have BEP sale, we have MOS sale. Again, total contribution. We have fixed cost, we'll be having profit. So we can tell BEP sale into PV ratio will give us the contribution which is equal to our fixed cost, and MOS sale into PV ratio will give us a contribution which is equal to our profit. Is it clear, students? Any doubts? So till now we have discussed firstly the concept of marginal costing. We've looked at the concept of contribution, PV ratio, variable cost ratio. We have looked at BEP in terms of units, BEP in terms of sale value. Now we have also looked at margin of safety. Any doubts till now? What happens? Humans' need is unlimited. Initially, we just thought, yes, we'll sell one shirt, we'll get 400. We were happy with that. Then we came to know we have a fixed cost. So we thought, yes, just let me at least recover my fixed cost. It is sufficient. Now I'm thinking forward. Yes or no? Yes, both friends are thinking. Yes, we are anyways recovering our fixed cost. But what we want is, yes, we are in our 20s now. Yes, we should take a bullet, roam around everywhere, do Arjun Reddy. Yes, be that macho man. So we want a bike. The bike will cost us 2 lakh rupees. We want a profit of 2 lakh from our business. So how much sale should we make? How many shirts should we sell? Okay, this is what one friend is telling. So the other friend is telling, bro, profit and all is fine, but whatever is the profit you are earning, remember that before you take away the money, pay the fixed cost of 10,000 rupees. So how much total contribution we want? We are telling we want a profit of 2 lakh rupees. So before we can take the profit, we should be recovering the fixed cost. So total how much contribution we should earn? We should earn a total of 2 lakh 10,000. 10,000 we should pay the fixed cost, and after that we should be having 2 lakh rupees. So how much contribution we want? We'll tell. Look at this. If we want a profit of 2 lakh rupees, before we earn a profit, we need to pay a fixed cost of 10,000. So we want a contribution of 2 lakh 10,000. rupees. We want 2,10,000 rupees on total basis. If we sell one shirt, we get 400 rupees. So if you want 2,10,000 rupees, how many shirts should we sell? How many shirts should we sell, students? If you want 2,10,000 rupees, tell me, students, how many shirts should we sell? It is 525 shirts. Yes or no? So we need to be selling 525 shirts. This is sales to achieve desired profit or loss. Yes. So what do we tell? To achieve our desired profit or loss. Before we can earn our desired profit or loss, firstly we need to absorb our fixed cost. It will be fixed cost plus desired profit or loss. This will be the total contribution that we want. The total contribution that we want is 2,10,000 in our example. And by selling one shirt, how much will I get? Contribution per unit. By selling one shirt, I'll be getting 400. So how many shirts should I sell? That is in terms of units. Or else I can also get it in terms of sale value directly, telling if 1 rupee is my sale, 0.4 is my contribution. So I want a contribution of 2,10,000 rupees. So how much should be my sale? 2,10,000 divided by 0.4 divided by PV ratio. You will directly get it in terms of sale value. 2,10,000 divided by 0.4 will tell our sale should be 5,25,000. Is it clear? Yes, everybody is answering. That is amazing. Now, we have one small concept left in our basic formulas. All these we have already discussed in inter. Yes. But these things here and there while we are solving questions will be relevant for finals as well. As a standalone question, these questions will not come. But whenever we are solving questions, somewhere adjustments, in adjustments, these things may be required. That's why we are discussing this first. Next, we have the concept of differential formulas. What is this differential formulas? Let us look at this. Suppose I am telling my selling price is 10 rupees, variable cost is 6 rupees, fixed cost is 50,000 rupees. If I am selling 50,000 units, suppose I am selling a pen. If I am selling 50,000 pen, my sale will be 5 lakh. My variable cost will be 6 rupees into 50,000, 3 lakh. My contribution will be 2 lakh. My fixed cost is 50,000 and my profit will be 1.5 lakh. My total cost will be 3 lakh plus 50,000, 3.5 lakh. This is the first case. Now, second case, if I am selling 1 lakh pens, 1 lakh pen into 10, 10 lakh rupees, 6 lakh will be the variable cost, 4 lakh will be contribution, 50,000 fixed cost, 3.5 lakh will be the profit, and my total cost will be 6 plus 50,000, 6.5 lakh. Now, if we see the difference, by how much a sale has increased by 5 lakh rupees. Yes, when the number of units are increasing by 50,000 units, our sale has increased by 5 lakh rupees. By how much our variable cost has increased? Our variable cost has increased by 3 lakh. By how much our contribution has increased? Our contribution has increased by 2 lakh. By how much our fixed cost has increased? There is no change in fixed cost. By how much our profit has increased? Our profit has increased by 2 lakh. By how much our total cost has increased? Our total cost has also increased by 3 lakh. Now, one interesting observation, if you guys see here, what is it? Change in variable cost and change in total cost are both one and the same. Yes or no, students? Change in variable cost, change in total cost are one and the same. Why is it? Because in fixed cost, there is no change at all. So we'll tell important observations. Change in variable cost will be equal to change in total cost because since change in fixed cost is 0. Second observation, change in contribution, how much is it? 2 lakh. Change in profit, that is also 2 lakh. So change in contribution will be equal to change in profit. Why is it? Again, because change in fixed cost is 0. These are the two main observations. Based on this, how do we develop the differential formulas? Variable cost ratio. Originally what we told, it is variable cost divided by sale into 100. PV ratio is contribution divided by. Now, if two different levels of output is given, I can also write variable cost ratio as change in variable cost divided by change in sale into 100. Yes or no? Look at this. In this case, variable cost ratio 60%. If I'm looking at it based on change, I'll tell from 50,000 when the number of units increased to 1 lakh, for additional 50,000 units, extra variable cost was 3 lakh, extra sale was 5 lakh. So change in variable cost divided by change in sale, 3 lakh divided by 5 lakh, variable cost ratio is 60%. So I can write it as change in variable cost divided by change in sale into 100. And we know that change in variable cost and change in total cost are one and the same. I can also write variable cost ratio is change in total cost divided by change in sale. This is variable cost ratio. So variable cost ratio is change in total cost divided by change in sale into 100. This is variable cost ratio. Next, we have PV ratio. We have told it is contribution divided by sale into 100. If two different levels are given, I can also write it as change in contribution divided by change in sale into 100. Look at this. Originally, my contribution is 4 rupees. So it is nothing but 40%. So I can also tell based on change, I will tell change in contribution is 2 lakh when change in sale is 5 lakh. So 2 lakh divided by 5 lakh is again 40%. So we know that change in contribution, change in profit are one and the same. It is change in profit divided by change in sale into 100 will give us the PV. Not generally tested, but even if it is asked, we should be in a position to know that and use it. So variable cost ratio is change in total cost divided by change in sale into 100. Why? Because change in total or change in variable cost are one and the same. PV ratio is change in profit divided by change in sale into 100. Why? Because change in profit, change in contribution is one and the same. With this, we've finished the basic concepts. So first, this we are discussing concept 1, the basic concept. In that concept 1A, we've told the basics of marginal costing. We compare marginal revenue, marginal cost, and accordingly take a decision. Concept 1B, we had the basic formulas. We've looked at contribution, we've looked at variable cost ratio, PV ratio, we've looked at BP in terms of units, in terms of sale value. Next, we've looked at margin of safety. Next, we've looked at sales to achieve desired profit or loss. Now we have looked at the differential formulas. Any doubts till now, students? Are you guys having any doubts? Should we continue? Perfect. So these were the basic concepts. In this, there are no questions in the study material. Yes, all questions from the study material. In relevant costing, decision making, we have 19 questions. All questions will be solving here. Don't worry, that's my promise. But in these two concepts, there were no questions, so we'll not be looking at them. Next, we have concept 1C, relevant costing technique. Very important from the perspective of examination. Yes, generally questions are asked. Relevant cost technique. Firstly, let us try to understand what is a relevant cost. Simply meaning, what is the relevant cost? It is the cost which is relevant to take any decision. So, relevant cost is any cost which is relevant to take any decision. What is the cost which is relevant to take any decision? I'm telling, if I take the decision, I will incur. If I don't take the decision, I won't incur. That is my relevant cost. So cost which is incurred only when we take a specific decision. Okay, so if we take a decision, that is incurred. If I don't take a decision, that is not incurred. Two conditions we want for a cost to be relevant cost. Firstly, it should be a future cost. Cost should be incurred in the future. If it is already incurred in the past, it is not relevant. We have already incurred, already paid. It is irrelevant altogether. Secondly, it should be a differential cost. That is, the cost should be different for different alternatives. If I take this one alternative, this is the cost. If I take other alternative, the cost is different. Only then the cost is relevant. What is the relevant cost? It is the cost which is relevant to taking any decision. That is, it is incurred only if we take a specific decision. Again, let us try to understand it with the help of examples and stories. So, assume, yes, one of my friend, Jayant, okay, he fell in love, he wants to go on a date. Now, we are looking at what is the relevant cost to go on a date. That is, what all cost we are incurring specifically to go on a date. This cost is incurred only if we go on a date. Otherwise, it will not be incurred. So look at this. To go on a date, he is purchasing a good shirt, 2000 rupees. Is it relevant, students? Is it relevant? Is it not relevant? This shirt he is purchasing only because he is going for a date. Otherwise, he would not have purchased. So, is it relevant? Is it relevant, students? He is purchasing a new shirt. Is it relevant? Yes, it's relevant. Some people are telling quote chocolate. Oh God, so many experienced people here. Yes, so this is relevant because he is incurring this specifically to go on a date. So this is relevant. Next, he got a haircut 1 week before. Yes, he got a haircut 1 week before, for which he paid 500 rupees. Yes, full hi-fi haircut he got. He got a haircut 1 week before. 1 week before. Is it relevant, students? 1 week before he got a haircut. Is it relevant or is it irrelevant? No, it is not relevant. Why? Because it was already incurred in the past. He is not taking this decision specifically for a haircut, for the date. Previously only he got a haircut. So it is not relevant. Next, because he is going for a date, he wants to get his beard, yes, trimmed, and he wants to get a facial. He has to look good, right? Yes, he is going for his first date. So he is paying 500 for that. This he is incurring specifically for going for a date. Is it relevant? Is it not relevant? Tell me, students, is it relevant? Yes, it is relevant. Third, we are going for a date. We need to give a gift, right? So he purchased a watch of 10,000. Super rich person. Yes, 10,000 watch he is purchasing and gifting. Is it relevant? Yes, he is incurring this specifically to go for a date. So it is relevant. Yes, fuel. He has his car. Okay, he already had purchased a car 1 year before. So he is not paying for the car again. So car cost is irrelevant. But to go for a date, he is paying the fuel cost. He is filling in fuel of 200 rupees. So the fuel cost is also relevant. He incurs all these costs. He gets on his car. He is ready to go for his first date. Now he goes for a date. He goes for a luxury, lavish restaurant. Okay, the food he is having is of 2000 rupees. A 2000 rupees food. Super rich person. Yes or no? Now he is telling food cost I am incurring now. I am incurring the food cost of 2000 rupees. He is telling otherwise also food is something which I could not have avoided. Otherwise also I should have had food. But otherwise I would have had normal food. Yes or no? Food 3 times in a day, it is like a necessity. So otherwise also I would have had a food which comes to 100 rupees. But now because I am going on a date, I am having a food of 2000 rupees. So how much is relevant, students? Otherwise also I would have paid 100. Now I am paying 2000. So how much is relevant, students? How much is relevant? Yes, only the additional cost we are paying. Additional 1900 is only relevant. Okay, so additional 1900 is relevant. So based on this, he can calculate what all relevant cost he has incurred. Yes, he can tell new shirt 2000 was relevant. Haircut which he got 5 days back was irrelevant. Trim fresh facial which he done specifically for this, it is relevant. Watch which he has purchased for gift is relevant. Food bill out of 2000 rupees, 1900 is relevant. 100 otherwise also he would have incurred, that is irrelevant. So what is the relevant cost? It is the cost which is incurred only if we take a specific decision. So two conditions. Firstly, it should be a future cost. We are going to incur it in future first. Second, it should be a differential cost. It is incurred only if we take a specific decision. Otherwise, the cost is not clear. Should we continue, students? Now, we have different cost and their treatment. We have different cost and what is the treatment we are going to show. Firstly, we have historic cost, sunk cost, committed cost. All mean one and the same. Yes, it is a cost which is already incurred in the past. So it doesn't affect the future decisions. It is already incurred in the past. In the past, we have already incurred. So is it relevant, students? It is irrelevant for decision making. So historic cost, sunk cost, committed cost is irrelevant for decision making. A simple example, suppose you as a student, you are planning to take CA inter coaching. You are planning to see which institute should I go for CA inter coaching. Yes, the foundation fees which you have paid. You have paid fees for CA foundation registration, CA registration, CA foundation examination fees. All those you have incurred in the past. Now, irrespective, you go for ABC Institute, XYZ Institute, you have already paid that. So it doesn't make a difference. Clear? So historic cost, committed cost, sunk cost, it is irrelevant for decision making. Yes, give example of historic cost. Firstly, it is research and development cost. Yes, to produce any product, we would have done the research. Now, once the research is over, irrespective of whether we produce the goods, we don't produce, this cost is already incurred, so it is irrelevant. Book value of assets. We have purchased assets. We have purchased a machine, say 1 year back. We have paid 1 lakh rupees at that time. The book value is irrelevant. It doesn't make any sense as on today. Clear? Next, we have fixed cost or fixed overheads. Fixed overheads, again we have two bifurcations. First, we have the allocated overheads. Second, we have the additional overheads. Yes, the different names which institute could use. Allocated overheads, allocated, absorbed, recovered, common, existing, unavoidable. All these mean one and the same. Okay, yes, what is it? It is irrelevant for decision making. All the allocated overheads is the existing overhead, just that we have distributed, it is irrelevant for decision making. However, if there is any additional overhead cost, additional, specific, traceable, avoidable, incremental, all of that will be relevant for decision. Yes, what is it? Again, let us try to understand it. Suppose I'm having a vegetable shop. Yes, I'm having a vegetable shop. So for which I'm paying a rent of 10,000 rupees. So what I did, as a part of my business expansion, I had some place left there only. So I started a new stationery shop also. In the same shop, a small area wherein I've started a stationery shop. So previously also my rent was 10,000. Now also my rent is 10,000. Just that for the two businesses, yes, practically while calculating cost, I bifurcate the cost telling. For stationery, the cost is 5,000. For vegetables, the cost is 5,000. But overall, if you look at it from the perspective, before also I was paying 10,000 only. Now also I'm paying 10,000 only. I'm just allocating my fixed cost. I'm just trying to absorb my fixed cost. So here the cost is irrelevant. Yes or no? We are planning to see whether to start stationery or not. This cost is irrelevant. Because if we start stationery also, we have to pay 10,000 rent. If we don't start also, we have to pay 10,000 rent. So it is irrelevant for decision. Okay. Second case. Suppose existing we had a shop, but if we have to start a stationery, we have to take a new place on a rent, for which we have to pay a total rent of 13,000 rupees. Previously we were paying only 10,000, but now we are paying 13,000. 3,000 extra we are paying if we take a decision. So this 3,000 rupees will be the relevant cost. Is it clear, students? The additional fixed cost, it is relevant, but the existing fixed cost is not relevant. Is it clear? Thirdly, we have opportunity cost. What is opportunity cost? It is the maximum contribution foregone. Yes, maximum contribution foregone by rejecting other alternatives. Telling how much maximum sacrifice we are making by rejecting other alternatives. It is just a notional cost, but it is relevant for all business decisions. What is it? Let us try to understand it again with the help of an example. Suppose I qualified as a chartered accountant. Now, what all options I have? Yes, either I can get into teaching, or I can start my practice, or I can get into Big Four, or I can get into industry. 4 options I have. If I enter into teaching, assume I'll be earning 10 lakh rupees per annum. If I get into practice, I'll be earning 9 lakh rupees per annum. Big Four, I'll be earning 11 lakh. Industry, I'll be earning 15 lakh. Now I'm trying to see how much sacrifice I'm making. Okay. Firstly, I'm telling if I'm getting into teaching, how much sacrifice I'm making. What is the maximum sacrifice I'm making? Yes, because I got into teaching, I cannot get into practice, I cannot go to Big Four, I cannot go to industry. So while I'm telling, I will tell, if not for teaching, what was the best possible alternate which I could have done? Yes, which was the most rewarding alternate I had? Yes, I could have gone for industry and earned 15 lakhs. Yes or no? So because I entered into teaching, I'm not in a position to earn that 15 lakhs. So this 15 lakh is my opportunity cost. Is it clear, students? Because I entered into teaching, I cannot go for industry. So this 15 lakh is my opportunity cost. Clear? Now, if I'm looking for practice, now I'm telling I've begun practice. What is my opportunity cost? If not for practice, what else I could have done? If I'm not doing practice, what else we could have done? Either teaching, either big four, either industry. Which is the most profitable? Yes, which is the most valuable? Industry was paying me 15 lakhs. So I'll tell, because I entered practice, I have sacrificed an earning of 15 lakh. Now big four is again 11 lakh. I'm telling you, if not for big four, what I could have done? Either teaching, practice, or industry. In that, practice was the best option, which would have given me 15 lakh rupees. I have sacrificed the 15 lakh rupees to get into big four. And fourth one, finally, industry. Yes, if not for industry, if I'm not working in industry, what else I could have done? Either I could have done teaching, either I could have done practice, either I could have done big four, which was the most profitable alternate. Yes, big four would have given me 11 lakhs. So I'll tell 11 lakh is my opportunity cost. Because of entering into industry, yes, I could not go to big four. So 11 lakh is my opportunity cost. Is it clear, students? Till here? Should we continue? Next, if we have out of pocket or any additional cost, yes, this we are incurring specifically for the decision. Additional cost we are incurring to take a decision. This is also relevant for decision. Clear, students? We have looked at 4 items. First, we have told historic cost, committed cost, sunk cost in the past, so it is irrelevant. Next, we have told fixed cost, fixed overheads. We are telling there are two things. Allocated, it is just the existing cost, irrelevant. Additional, extra we are incurring, so it is irrelevant. Thirdly, opportunity cost. It is the maximum contribution foregone. It is relevant. Next, we have the out of pocket or additional cost. This also extra we are incurring, so this is also relevant. Now, based on this, we have relevant cost for material, for labor, for overheads, and for machine. Very important, very, very, very important. Yes, based on this, we have 4 to 5 questions previously asked in the examinations as well. Let us try to understand it logically with the help of a example. Suppose this is me, okay? As soon as I qualified as a chartered accountant, I began with my CA inter classes. I started providing CA inter classes. This is my team. Yes, we have pen drive, we have Xerox machine. Yes, all these things we have. Now I'm thinking, should I start taking classes for CA final as well? Yes, so I'm trying to see what all relevant cost will I incur. If I take the decision that I will take classes for CA final, what all cost I will be incurring. Yes, so all these things I have 2 employees with me. This is my recording studio where I record. Firstly, I am looking at material. Yes, what all material I want. Yes, firstly, if I'm giving pen drive classes, I want the pen drive. Okay, so I'm looking at the pen drive cost, material cost. What is the relevant? Firstly, is it relevant or not? If it is relevant, how much is relevant? First case, I call my employee. Yes. So employee, I ask, to give pen drive classes, do we have pen drives in stock? Yes, I'm planning to give CA final classes through pen drive. Yes, do we have pen drives in stock? He tells, no boss, we don't have pen drive in stock. So I tell, yes. Then purchase. We are planning to give classes of through pen drive. Purchase the pen drive. How much is the cost for one pen drive? He tells, for one pen drive, it is 500 rupees. So how much is the relevant cost, students? What is the relevant cost here? What is the relevant cost? I purchase one pen drive, I have to pay 500 rupees. How much is the relevant, students? Tell me, what is the relevant cost? 500 is the relevant cost, yes or no? So if goods are not in stock, I have to purchase them. So my purchase cost will be relevant. If goods are not in stock, I'll purchase. So whatever amount I'll pay for purchase, that will be relevant. Now, second case. Yes, I again call my employee. I ask him, yes, do you have pen drive? He tells, yes, pen drive is there in stock. So I'm asking, yes, is it lying free or are you using it currently? He's telling, we are using it for CA inter classes. There is a good demand for CA inter classes. So we are at present using these pen drive for providing CA inter classes. I tell him, do one thing. CA final, for CA final classes, I immediately want the pen drive. So these pen drives I will use for CA final classes. For CA inter classes, you go to the market, purchase new pen drives. Clear? Yes. Raw material is already there in stock, but it is regularly using. Pen drive is already there with me, but I'm already using it for CA inter. Now I'm telling I will use it for CA final now. But for CA inter, you go to the market, buy new ones. So we ask, how much is it? So he tells for every pen drive, it is 500 rupees. So if raw material is in stock and it is regularly used, then the relevant cost is my replacement cost. How much cost will I incur to replace these raw materials? Replacement cost, purchase cost are generally one and the same. So I'll tell, yes, if raw material, two scenarios. Firstly, raw material is not in stock, purchase cost. Raw material is in stock and it is regularly used, I will have to replace that. I'll have to purchase it again. So the replacement cost is relevant. Is it clear, students? Third scenario. Yes. I call my employee. I ask whether we have pen drive stock. He tells yes, pen drive is there in stock. Yes. I ask yes, whether it is in use. He is telling yes, pen drive you purchased, sir, but no use at all. CA inter students, everybody is purchasing Google Drive only. So we have so many pen drives in stock. We were planning to sell it off to scrap. We were planning to sell it off as a scrap. Yes, by selling it off as scrap, we were planning to get 200 rupees per piece. So what I was planning to do, what the employee was planning to do, he was planning to sell it off as a scrap. If he sold it as a scrap, all these pen drives, he would get 200 rupees per pen drive. So I tell, don't sell it to scrap, give it to me, I'll use it for CFI. So how much is relevant, students? How much is relevant in this case? Yes, otherwise what I would have done, otherwise I would have sold it as scrap, I would have earned 200. Now because I am taking this decision, I cannot sell it as scrap. This 200 rupees I have sacrificed. So I'll tell, this 200 rupees is a relevant cost for me. So what is this 200? It is the realizable value, NRV, by selling of scrap. So if raw material is in stock but it is not regularly used, then the relevant cost will be the realizable value. Is it clear, students? It is the realizable value. So look at the bifurcation. Raw material. Yes, either raw material will not be in stock or raw material will be in stock. Raw material is not there in stock, we need to purchase. So purchase price is relevant. If raw material is in stock, we ask whether it is regularly used or it is not regularly used. If it is regularly used, we will tell now we'll use it, but we need to replace it. So replacement cost is relevant. But if it is not regularly used, it is realizable value. Okay, realizable value is one thing. Yes, but we also have benefit from alternate use, whichever is higher. What is it? Let us try to understand. Pen drive. I purchased the pen drive. Okay, there was no use at all. So what employee made a plan is that yes, employee asked the scrap dealer, how much is the scrap value? So he told the scrap value is 200. Again, he had his friend who was selling movies through pen drive. Okay, so he told yes, let us enter into a partnership. Let us sell movies through pen drive. Okay, by selling a movie, yes, we have no cost to sell a movie. Yes, we already have the movies on our laptop. Just put it and sell it. Yes, but if we sell this pen drive, which contains all the movies, we'll be getting 300 rupees. Which one would we choose, students? We have two options. Either, yes, I have two options. Either I sell it off to scrap, I will get 200 rupees. Or I sell it to my customer with movies, I'll be getting 300 rupees. Which option will I choose? Which option will I choose, students? 300, yes or no? Ultimately, I want more money. So 300 will be relevant in this case. So it is realizable value, or if there is any alternate use, I'm telling yes, alternatively I can use it for this one. What is the benefit I get from alternate use? Whichever is higher, that is the relevant cost. Is it clear, students? This is in case of material. Yes, I hope you guys are liking it. Yes, if you like the class, yes, do put a like. Yes, it motivates us to work even more. So material, yes, two different scenarios. Either it is not in stock or it is in stock. If it is not in stock, yes, we'll have to purchase them. The purchase price is relevant. If it is in stock, material is in stock, and it is regularly used, we are regularly using it, so we are telling we need to replace it, then replacement cost is relevant. Yes, we are telling material is in stock, but it is not regularly used, it was lying idle. Yes, it is obsolete, non-moving, special stock. Yes, so we are planning anyways to dispose it off. What is relevant? If we sell it as scrap, how much is the realizable value we get? Or if we have any alternate use, what is the benefit from alternate use? Whichever is higher will be our relevant cost. Clear, students? Is either realizable value or benefit from alternate use, whichever is higher. Is it clear? Now, few additional things. Yes. Firstly, we have told purchase price, replacement cost generally are one and the same. Yes or no? Yes. If I want to purchase, I'll tell it is my purchase price. If it is already in stock, I'll tell what is the replacement cost. Both means one and the same. It is the purchase price only. Book value of material, that is the historic cost of purchase, is irrelevant for decision making. Yes or no? Book value of material. At what price I have purchased the material in the past is irrelevant. Suppose I'm telling, yes, I've purchased this pen for 50 rupees in the past. Irrelevant. What I'm asking, now if I have to replace, how much is the cost? 10 rupees. 10 rupees is it. What price we have purchased in the past? It is historic, sunk, committed, already incurred in the past. It is irrelevant for decision making. Thirdly, for non-moving material in stock. Yes, the third case, raw material is in stock, but it is not regularly used. Few things. If data regarding alternate use is not available, we will consider only realizable value. What is it? If details is given about alternate use, we will consider. But if it is not given, we'll eliminate, we'll only consider realizable value. If alternate use is not available, then what can we do? That is the first thing. Second and the most important thing, if cost is incurred to dispose the non-moving material, then cost of disposal will be reduced. Calculate the relevant cost. Very important is if we have any harmful hazardous chemicals, okay, and we had it in stock. Suppose we had purchased some harmful chemicals. Yes, it is lying in stock. Now, generally, what will happen? We don't want the material, so we'll sell it off as scrap. So, scrap dealer will give us 200 rupees. So, if we sell it off as scrap, we'll be getting 200 rupees. But this is a harmful item. No scrap dealer will give you money. Yes, instead we give it to scrap dealer. He's telling, yes, I will dispose this item, but you pay me 500 rupees. Yes or no? We need to pay. Otherwise, we were getting the amount. So, we were showing the relevant cost. Because of this, we won't get the amount. Otherwise, we are getting the amount. Now, what we are doing? We have to pay the amount. So, this amount, cost of disposal, what amount we are paying, it will be reduced while we arrive at the relevant cost. Look at this. Highly toxic chemical is in stock with us, which is not moving. Yes, cost of disposal is 400 rupees. So we'll tell if we have to dispose, we had to pay 400 rupees here. We'll tell yes, we don't want that 400 rupees. If we can use it here, my relevant cost will be 400 negative. Is it clear, students? Look at this. Yes. Other item, if I sell it off, look at this simple. Other items, I sell it off, scrap dealer will give me the money. So I will show the relevant cost. But here, I have to pay the money. So I will show negative of that. I am paying the money. So I will show negative cost. Is it clear, students? This is with respect to material. Yes. Next, we have with respect to labor. Yes, once we get done with this, we have good questions on this. Solve them as well. Yes. Next, we have with respect to labor. Labor could be either existing employees or else new employees. Suppose I already had 2 existing employees. Yes, or no, I've shown you their photos. Yes. For CA Final, specifically, I want a new person. I want a person who will handle the queries, look at the technical side, look at the administration side, all those things for CA Final. If I am hiring a new employee, I have to pay him wages, yes or no? I'm hiring a new person, I'm telling I'll give you 15,000 rupees per month, come join. Yes, why am I incurring this 15,000? Specifically for taking CA final class. So if I'm hiring a new employee, yes, additional employee, yes, casual employee, yes, relevant cost will be the wage paid. how much amount I am paying to him. Yes, that wages, whatever is the wages I am paying him will be relevant. Clear, students? Suppose I am hiring a new employee, I have to make him the wage payment. This wage payment I am incurring specifically because I am taking a decision. So whatever is the wage paid will be relevant. But if it is an existing employee, I'll see if there is a spare capacity available or if he is working. Suppose we have two employees. Yes or no? For both the employees, I'm paying 15,000 per month, 15,000 per month. I'm paying together 30,000 rupees. Yes, and I had only classes for CA Inter, very few students were there. So most of the time, these employees were free. Yes, they were looking at Instagram shorts, they were looking at, yes, TikTok, everything. Yes, I told them, anyways, they're sitting free, right? Let me give them CA final work also. Am I incurring any extra cost? No. Previously, when I was not taking CA final class, I used to pay 30,000. Now also I'm paying them 30,000 only. So if I have extra capacity, the relevant cost is nil. Clear? But if there is no extra capacity, if labor is in shortage, that is, there is no spare capacity, then what will I do? Suppose both the employees are working full time, they're working full time for CA Inter. I tell one employee, yes, you forget about CA Inter for the time being. Yes, let us focus on CA final. So because of CA final, what all I'm paying? I'm paying him the wages, 15,000 wages I'm paying him. Additionally, what is happening? When he was there, yes, monthly 100 students used to take CA Inter classes. So from 100 students, I used to get 1,000 rupees per month from every student. So 1 lakh contribution I would get from the students. Now, because he is not there, I'm sacrificing this. So I'll tell this 1 lakh rupees is also relevant for the decision. Otherwise, previously, what used to happen? Yes, previously he used to work for CA Inter. Yes, I would get a contribution of 1 lakh. Now, this contribution of 1 lakh also I'm sacrificing. So, what all is the relevant cost? Wages I'm paying, anyways, is relevant. But in addition to that, whatever is the opportunity cost that I'm incurring, that is also relevant. That is also incurred because we are specifically taking this decision. Is it clear, students? So, for labor, two cases. Yes, first, new labor, additional employees, wages paid is relevant. Existing employees, if there is spare capacity, it is not relevant. But if there is no spare capacity, whatever is the wages plus the opportunity cost is relevant. Is it clear, students? Any doubts? Should we continue? Yes, you guys are motivated. Should we continue, students? Tell me. Okay, for labor, yes, either we have new employees or existing employees. If it is new employees, yes, whatever is the wages we are paying them will be relevant. But if it is the existing employees, we ask if excess or spare capacity is available. Spare capacity is available, relevant cost is nil. But if no spare capacity is available, then the relevant cost is wages plus the opportunity cost. Is it clear, students? Yes, should we continue? Third, we have with respect to overheads. With respect to overheads, look at this variable overheads. It is always relevant. Yes or no? Variable cost we are incurring. Yes, which varies based on number of units. Yes, so it is relevant. Suppose electricity cost. I decide to take classes for CA final. Yes, suppose I am taking the classes. I need to record the classes. Electricity cost I will be incurring. Relevant cost is a variable overhead cost incurred will be relevant. Variable overhead cost is always relevant, no doubt on it. But coming to fixed overhead, I will ask, is it the allocated overhead or is it the additional overhead? Yes, if it is allocated overhead, we have already told students it is irrelevant. Allocated overheads is irrelevant for decision making. Suppose I am telling, yes, I had taken a place for rent. The rent I was paying was 10,000. So previously also I used to pay rent of 10,000. Now also I am paying rent of 10,000. Yes. So extra rent, nothing I'm paying. Now what I'm doing, because I have CA Inter and CA Final classes, I'm telling for CA Inter cost is 5,000, for CA Final cost is 5,000. I'm just allocating my overheads. Extra nothing I'm incurring. I'm telling my relevant cost is zero. Allocated overheads is irrelevant for decision making. Is it clear, students? But additional overhead, suppose previously I was paying a rent of 10,000. Now because I have CA final books, I have employees, I've taken another place, I'm paying total 15,000 rent. So extra 5,000 will be relevant. Additional overheads is relevant. Additional overhead, specific overhead, traceable overhead, avoidable overhead, it is relevant. Clear, students? Should we continue? Yes, sir. Yes. So many chats we are getting. Is eventually these chats that motivate us to work. Yes or no? Yes, should we continue? So we've looked the relevant cost for material, we've looked at labor, we've looked at overheads. Now finally we have for machine. So machine. For taking CA final classes, I want to take printout of the books, so I want a Xerox machine. So what do we do of Xerox machine? I ask my employees, what all options are there? So he tells, sir, either you can get it on a rent or you can purchase it. That's what all is the cost. So he's telling, if we are getting it on rent, yes, for 1 year it is 15,000. Okay, I have to pay 15,000. If I'm purchasing it, what is the cost? He'll tell, yes, to purchase, now I have to pay 50,000. But once we use it and after 1 year, if you're selling, you'll be getting back 30,000. That is resale value. So net, how much is the cost, students? Second case, net, how much is the cost? Now I'm paying 50,000, but after 1 year, I'll be getting 30,000. So net, what is my cost? In the second case, net, what is my cost, students? 20,000. Yes or no? So I have two options. Look at this. Either I can get it on rent, the machine on rent. If I get the machine on rent, my net cost is 15,000. Or I will purchase it now and resell it. If I purchase and resell it, my net cost will be 20,000. Which option will I choose? Will I get it on rent or will I purchase it? Which option will I choose, students? Will I get it on rent? Will I purchase it? Which option will I choose? Tell me, students. Yes, we'll get it on rent. Yes or no? So the relevant cost is 15,000 rupees. Okay, relevant cost will be either rent paid or net cost of purchase, whichever is lower. Relevant cost is rent paid or net cost of buying, whichever is lower. Whatever is the lower amount we'll be incurring, that decision will choose. So it is whichever is lower. Is it clear, students? Yes, any doubts you have, we'll keep it for later. At the end of it, all doubts, I've looked at few doubts, all doubts we will solve it at the end of it. Don't worry, students. Okay, so machine cost, either we can get it on rent or else we have the net cost of buying, that is purchase cost minus resale value. Yes, whichever is lower is what we will be choosing. Net cost of buying is purchase price minus resale value. Yes, suppose a new machine is required, same example. Yes, if you are getting it on rent, 15,000. If you purchase and sell it off, will be, yes, for purchase you have to pay 50,000. For resale, you will be getting 30,000, 20,000. Which option will be choosing? We'll tell. Let us get it on rent. So the relevant cost will be 15,000. Clear, students? So this was the first concept, the concept of relevant cost. Now, two issues are there if we are taking a decision and accordingly determining the price based on relevant cost. Yes, maybe ask for theory questions. What are the two issues or what are the challenges if pricing is based on relevant cost? Two challenges. Firstly, profit reporting. Second, pricing of future work. Profit reporting, yes or no? In accounts, in the books, what all cost will be showing? We'll be showing all the cost. Yes or no? We'll be showing relevant cost, we'll be showing irrelevant fixed cost as well. But while we are setting the price, we are considering only relevant cost. So in the books, it may be showing a loss, even though the proposal is profitable for us. Go back to the first example. Taking, yes, we were having two people in the room. Yes, we wanted to take the third person. On the outside, it felt it is not a profitable proposal because cost per person is 2,000. But actually, it was a profitable proposal. If you tell to anyone outside, he'll tell, why have you taken this decision? So profit reporting, even though the decision is good for the entity, the profit may be negative. That is one issue. That is one challenge. Every time we need to keep explaining. And second, pricing of future work. What happens Every time relevant cost keeps changing. Suppose now I had labor as a spare capacity, so the relevant cost was nil. But next time what happens? Yes, labor may not be available, so I need to add the labor cost. So relevant cost changes. So based on that, my price changes. So customer may tell every time he's changing the price, what is happening? Yes or no? So pricing of future work, that is one thing. So two issues. If you are pricing based on relevant cost, firstly, profit reporting, even though it is profitable, but in the books it may not be showing, so we need to keep explaining. Secondly, pricing of future work, relevant cost will keep changing every now and then. So for the future, it need not be relevant. Whatever cost is relevant now need not be relevant in the future. So accordingly, pricing will also change in the future. These are the two challenges. Is it clear, students? Yes, this is concept 1C, very important. Let's quickly have a revision. Firstly, we have told the relevant cost. What is relevant cost? It is the cost which is incurred for taking a decision. Yes, so historic cost, it is irrelevant. Fixed cost, if it is allocated, it is irrelevant. Additional is relevant. Opportunity cost is relevant. Out of pocket cost is also relevant. Next, for material, if it is not in stock, we have to purchase. Purchase price is irrelevant. If it is in stock, it is regularly used, we tell we need to replace, so replacement cost is relevant. If it is not regularly used, we tell what is the realizable value, what is the benefit from alternate use, whichever is higher will be relevant. Next, we are told for labor, additional employees, we have to recruit, whatever is the wage we are paying will be relevant. Existing employees, if there is a spare capacity, relevant cost is nil. Yes, if there is no spare capacity, it is wages plus opportunity cost. For overheads, variable overheads is always relevant. Fixed overheads, allocated is not relevant. Additional is relevant. And machine cost, it is rent or net cost of buying, whichever is lower. We have two issues. Firstly, we have profit reporting. Second, we have pricing of future work. Is it clear, students? Yes, all doubts will be taken at the end of the session. Okay, first let's finish what we have targeted to finish. At the end, whatever doubts we have, we are there, don't worry. So now we are looking at the questions. Yes, believe me, we are going to cover all the questions from the study material in a very limited time. Okay, so we have done almost all writings, yes, all unnecessary writings, so that we can cover it in a very little time possible. So what all we will be doing? Yes. So what all questions we have from the concept of relevant costing? We have illustration number 6 and test your knowledge question number 5, 6, 7 and 9. Altogether we have 5 questions. Firstly, let us have a look at illustration number 6, page 5.23. Illustration 6, page 5.23. Yes, I have the PDF of the questions here. Yes, illustration 6, page 5.23, XT polymers. Should we read the question, students? Everyone. Excel Polymers manufactures high quality industrial products. AT Industries has asked Excel Polymers for a special job which has to be completed within 1 week. What is required? We need to calculate what is the minimum price that we should quote for the job. What is the minimum price? Whatever is the relevant cost we are incurring, that will be the minimum. Firstly, what all we have? Let us see. Firstly, they are telling about raw material R1. What is this raw material R1? It is highly toxic. Okay, it was purchased. We have purchased it 2 weeks ago for 7,500. Okay, we have purchased it 2 weeks ago. We have purchased it 2 weeks ago for 7,500. This is the historic cost, sunk cost. At what cost you have purchased? It is irrelevant. Yes, previously at what cost you have purchased? Doesn't matter at all. Yes or no? Now what is required? Only that will worry. Now, R1 currently is in stock, is the excess from the job, is excess that is available and company was planning to dispose it off. Yes, what is the case? Raw material is in stock and it is not regularly used. We were planning to dispose it off. Yes, Excel Polymer estimates that it would cost them 1,250 to dispose of the R1. Replacement cost is 6,000 rupees. What is the relevant cost, students? Firstly, whether replacement cost is relevant. No, replacement cost is irrelevant because it is not regularly used. So raw material is in stock and it is not regularly used. It is realizable value or benefit from alternate use, whichever is higher. Do we have any benefit from alternate use? No, we don't have any benefit from alternate use. What is the realizable value? Realizable value is 1250 negative. Negative 1250. We have to pay 1250 rupees. Yes or no? He is not giving us. I have to pay 1250. So my relevant cost is 1250 negative. Is it clear, students? Yes, what about other topics in decision making? Entire topics, entire question will be finishing it off. Morning 10 to 12 or 12:30 will be having the session. Evening 4 to 6 or 6:30 will be having the session. Okay, for the next 3 days. We'll be finishing decision making, transfer pricing, and if possible, we'll also try to finish standard costing. Okay. So this is clear. Yes, minus 1250 is the relevant cost. If this job was not there, we had to dispose it off, we had to pay 1250. Now we are saving that 1250. We'll tell, yes, our relevant cost is 1250 negative. Yes, that is first thing. Second thing, special job will require 250 hours of labor G1 and 100 hours of G2. Excel polymer is paying 630 and 336 for 42 hours. Okay. Excel polymers is having excess capacity of 150 hours of G1, 200 hours of G2. Yes, it can also hire additional employees on hourly basis. They are also paid the same hourly rate. Okay. Yes, calculate the minimum price. Look at this. First, we want raw material R1. What is informed about raw material R1? It is highly toxic. It is highly toxic. It is in stock and we were planning to dispose. So what is the relevant cost? It is realizable value or benefit from alternate use, whichever is higher. Realizable value, we are not having realizable value. Scrap dealer is not willing to pay us any amount. No alternate use is available as well. But to sell this, we had to incur a disposal cost of 1250. So we will tell our relevant cost is 1250. Next, we also have the labor cost. About labor cost, what question has told us? We have two different employees, G1 and G2 employees. For G1 employees, we are paying 630 rupees for 42 hours. So how much we are paying hourly? 630 is for 42 hours. So per hour, we are paying 15 rupees. For G2 employees, we are paying them 336 for 42 hours. So per hour, we are paying them 8 rupees. Yes. Now, how much hours is required for the job? 250 hours is required for the job. Okay. G1 employees, we are paying them 15 rupees per hour. 250 hours is required for the job. How much hours spare capacity is available, students? What is the question telling? How much spare capacity is available, students? Look at the question and tell me the spare capacity available. G1, how much is the spare capacity available, students? Yes, 150 hours spare capacity is available. So we will tell total 250 hours is needed. 150 hours anyway spare capacity is available. So additional 100 hours is needed. Clear? 150 hours anyways spare capacity is available. So what is the relevant cost? Relevant cost is 0 here because anyway spare capacity is there. But for additional hours, what do? We hire new employees. And for new employees, how much we are paying, students? G1, we are paying 15 rupees per hour. So we will be paying 15 rupees per hour into 100 hours. How much is it, students? 15 per hour into 100 hours is 1500 rupees. So the relevant cost of G1 employees is 1500. Is it clear? Yes, G1 employees. Is it clear, students? Yes, perfect. Now G2. Yes, G2 employees, we are paying 336 for 42 hours. That is 8 rupee per hour we are paying. 100 hours is required. How many hours spare capacity is available? How many hours spare capacity is available, students? How many hours spare capacity is available for G2? Tell me. Yes, 200 hours spare capacity is available. Yes or no? So we'll tell, yes, 200 we don't want, but give us 100 hours. So from this we'll take 100 hours. So relevant cost is 0. So how much additional hours is required? How much additional hours is required? Do we want any additional hours? No. Additional hours required is 0. So additional cost will be paying is 0. For G2 employees, the relevant cost is, we'll be telling labor cost. For G1, it is 1500. For G2, it is 0. So the minimum price we need to be quoting, it is minus 1250 and plus 1500. It is rupees 250. 250 is the minimum amount we need to be charging to our customers. This is the answer. Again, in the examination, whenever we are writing, we should not just write what the amount is, we should write why the amount has come. Suppose for raw material R1, firstly we need to say raw material is in stock and it is not regularly used. So relevant to cost is the realizable value or benefit from alternate use, whichever is higher. Here benefit from alternate use is not available. Realizable value is also not available. Is instead company is incurring the cost to dispose of the raw material. So the disposal cost of raw material will be reduced to arrive at the relevant cost. So relevant cost is minus 1250. Next, for labor, we need to write, yes, G1, how much we are paying, how much excess capacity available. That is relevant cost is 0. Additional hours, we will recruit new employees, we will be paying this amount. So this is the relevant cost. This is what is the answer. Look at the answer. Yes, they have not presented it properly, beautifully. Yes, the minimum price for the special job is 250. Again, we need to tell, yes, for material, yes, it is minus 1250, and for labor is 1500. So overall, it is 250 is the minimum cost. Yes, present it properly. Tell what you are doing, why you are doing what you are doing. Clear, students? This was illustration number 6. Next, we have test your knowledge, question number 5, page 5.37. Yes, we have this question here. Test your knowledge, question number 5, page 5.37. Okay, should we continue? Should we go to this question, students? You guys are ready? Yes. So let's look at the question. Y Connections, a China-based firm, has just developed an ultra-thin tablet with new features. Okay. This tablet cost 5 lakh rupees to develop. To develop this tablet, it had cost us 5 lakh rupees. Is it relevant? Is it irrelevant, students? It is already incurred in the past. So now whether we manufacture, we don't, we manufacture 10,000 units, 50,000 units. This 5 lakh rupees cost is already incurred. We've told research and development cost, book value of asset. It is a sunk cost, so it is irrelevant. This 5 lakh rupees cost is irrelevant. Now, currently what is happening? Firm is deciding on the plant capacity, which could cost either 35 lakh or 52 lakh rupees. Additional outlay will allow the plant to increase the capacity from 500 units to 750. The relevant data is given, selling price is given, variable selling cost is given, salvage value is given, and PV ratio is given. Yes, what is required? Advise, not calculate, advise the optimal plant capacity. Yes. What is the question trying to tell? We have produced a tablet. Now we have two options. Either we can produce 500 units or we can produce 750. Which one should we produce? Yes or no? We want to calculate the optimal plant capacity. Either we can produce 500 units or we can produce 750 units. Which one will we opt, students? Financially, which one will we opt? We calculate what is the profit we get if we are producing 500 units. What is the profit we get if we are producing 750 units? Suppose here the profit is 10 lakh, here the profit is 15 lakh. So you'll tell wherever profit is maximum, we are ultimately businessmen will choose that. So how do we choose? Yes, wherever our profit is maximum, that we will choose. Yes, this is what is ultimately required in this question. So, calculation, before we calculate the question, look at this. For existing units, okay, so variable cost, there are two different variable cost. One is variable selling cost, it is given. Variable manufacturing cost is not given. That needs to be calculated. Yes, for 500 units, selling price is 79,600. PV ratio, contribution is 40%. variable selling cost is 10% of selling price. Based on that, we can calculate the variable manufacturing cost. Look at this. Cost could be variable cost could be fixed cost. Again, in variable cost, we'll be having variable manufacturing cost, variable selling and distribution. Now look at this. What question is telling? Question is telling our selling price, our selling price is 79,600. What is contribution? Question told contribution is 40%. So how much will be contribution, students? 40% of 79,600. How much is it, students? Tell me in the comments. Rupees 31,840 rupees. This is the contribution. So how much is the variable cost? 79,600 into 60%, 47,760 rupees. The variable cost. Variable cost, again we are telling we have variable manufacturing cost, variable selling cost. Yes, variable manufacturing cost, variable selling cost. How much is the question telling, students? Variable selling cost. Question is telling variable selling cost is 10% of selling price. Our selling price is 79,600. So 10% of that, 79,600 into 10% is 7,960. So balance amount should be variable manufacturing cost. So 47,760 minus 7,960 is 39,800. This is the variable manufacturing. Now we are calculating, yes, what will be the profit? Yes, there are two different levels. Firstly, at 500 units, what is the profit? At 750 units, what is the profit? How do we get marginal cost sheet? We have told sales minus variable cost, you get the contribution. Yes, we have calculated on per unit, so we get the contribution per unit multiplied by number of units, you get the total contribution. Now look at this. For 500 units, selling price is 79,600. Yes, variable cost. What is the variable manufacturing cost, students? We have calculated it is 39,800. Is 39,800. So we'll tell to manufacture a tablet, the variable cost is 39,800. What is the variable selling cost? Is given 10% of selling price, so it will be 7,960. So how much is the contribution per unit, students? 79,600 minus 39,800 minus 7,960. 31,840 is for one tablet. If you are selling 500 tablets, how much is it? It is 1 crore 59 lakh 20,000 rupees. 1 crore 59 lakh 20,000 rupees is the total contribution. Is it clear till here? Now we need to look at the fixed cost. Fixed cost, look at the fixed cost. What is the question telling? If we are if we want a plant to produce 500 units, the cost will be 35 lakh rupees. 35 lakh is the cost I am paying now. That is, the entire amount is not my cost. 35 lakh is the amount I am paying now. In that, 6,25,000 will be my salvage value. Look at this. If I want a plant which could produce 500 units, I will have to pay 35 lakh rupees. From that, 6,25,000 rupees, I will get it back. 35 lakh I pay, 6,25,000 I get it back. What is the net fixed cost, students? 35 lakh minus 6,25,000 is 28,75,000. So 1 crore 59 lakh 20,000 minus 28,75,000, it is 1 crore 30 lakh 45,000 rupees will be my profit. Is it clear, students? Second case, let us look at the second case. Second case, selling price is 69,600 rupees, 69,600 rupees. Variable manufacturing cost. Yes, we have the basic assumptions of marginal costing. If nothing is given, variable cost will be same. What is question telling? Nothing is given about variable manufacturing cost. Will tell that you are producing 500 units, 750 units. To produce, the cost will be same. To produce a tablet, it will be 39,800 only. What is the variable selling cost? Question is telling it is 10% of selling price. So 10% of 69,600, 6,960. What is the contribution per unit, students? Tell me what is the contribution per unit. Yes, 22,840. 22,840 is a contribution per unit. Like this, how many units we are selling? 750 units we are selling. So the total contribution will be 1 crore 71 lakh 30,000 rupees. From this, we need to reduce our fixed cost. If we have to produce 750 units, we need to purchase a plant for which we should pay 52 lakhs. And while we sell this plant, we'll be getting a scrap value of 9 lakh rupees. So 52 lakh minus 9 lakh rupees, net depreciation will be 43 lakh rupees. We'll tell 1 crore 71 lakh 30,000 is our contribution. From that, we reduce 43 lakh fixed cost. We will arrive at a profit of 1 crore 28 lakh 30,000 rupees. Is it clear, students? So which one is better? Which is better? Where do we have a higher profit? Which is better, students? Yes, to produce 500 units is better because our overall profit is higher here. Yes or no? Yes, to produce 500 units is better because the overall profit is higher here. Yes, one doubt we have. Abhishek is asking, as units has increased, variable manufacturing cost will increase or not? Look at this, Abhishek. This is the cost per unit. Okay, this is the cost per unit. Yes or no? Per unit cost will not change. If you multiply by number of units, it will increase, but the per unit cost will remain intact. Okay, suppose I have to manufacture one shirt. Yes, I want a fabric which costs 200 rupees. Two shirt also. Yes, per shirt the fabric cost is 200 rupees only. Okay, here we are calculating per unit. Okay, so it will be the same. So which is better, students? Yes, so this one is better. That is, on a financial perspective, yes, we should go for a plant capacity to produce 500 units. Now, what is the question asked? This question had asked advise. So if question is telling calculate, the question is over here. But question has told advise. So we need to give an advice. So every time we are giving the advice, look at what we have to tell. We always have to tell what from the financial perspective, which is better. Also, we need to tell something from the non-financial perspective. Let us see what question is trying to tell us. From financial perspective, which is better, we need to go for 500 units. That is high price, low volume. At 500 units, we are charging higher price and we are selling lower volume. But from a non-financial perspective, yes, look at, I have given you a summary point of what institute's answer has told. Firstly, we'll be telling non-financial factors. Even though they do not contribute for profit in the short term, but they contribute to profit and sustainability in the long run. For long run, non-financial factors are very important. Yes, again, one more thing they're telling is there is no significant difference between the profits. Okay, this is a mistake from ICAI because ICAI has calculated the amount in terms of thousands. So they are telling there is no significant difference. Yes, there is a difference. There is a difference of, say, for example, 2 lakh rupees approximately. Okay, yes, based on materiality, you can consider it is not a big difference as well. So they are telling there is no significant difference between the profits. So what suggestion they are telling is, what we can do is, we can opt for low volume, high volume, low price. Yes, it is telling because there is no significant difference between the profits. What is one thing we can do is we can opt for 750 units. Why? What happens if we are in a position to sell to more people? We can get a bigger market share. Yes or no? And we sell our goods to more people. What happens? If our goods are good, it will help us build a good brand image. This is what the answer is for. Firstly, from a financial perspective, we'll tell yes, we should go for high price, low volume. But from a non-financial perspective, we'll tell yes, non-financial perspective, it is about thinking for the long term. For the long term, we'll tell there is not a much difference in the profit. It is just approximately 2 lakh. Alternatively, what we can do is we can go for high volume because we'll get a bigger market share, we'll be a bigger player, so we'll be in a position to establish our brand. This is what the answer has told. Look at this, look at the answer. Yes, firstly, we have made the calculation, all calculations we have done. Variable manufacturing cost calculation we have done here. Profit, they have calculated in terms of thousands. So they are telling, yes, 1 crore 30 lakh 45,000, 1 crore 28 lakh 30,000. Same thing we have done. And what is the advice they are giving? Yes, they have written a paragraph, we have split it down. From a financial considerations, we should go for high price, low volume. However, non-financial factors should be considered because they contribute significantly to profit in the long run. Yes, so we are telling there is no significant difference in the profit. So we can go for high capacity so that we can get a bigger market share and also will be in a position to build a long-term brand image. Always look at what is asked in the question. Question has asked advice, so we need to give a non-financial factor, a non-financial advice. Is it clear, students? Any doubt in this question? Should we continue? Yes. Now, next question we'll be solving. It is test your knowledge question number 6. Question number 6, page 5.37. Test your knowledge question number 6. Question number 6 that we have. Yes, what is required? Look at this. Calculate the relevant cost of material. We have to calculate the relevant cost of material. Yes, what all is there? Yes, we have 4 raw materials A, B, C, D. Individually for one raw material, we'll look at the question, we'll solve. Raw material A, how many units is required? 2000 units is required. Yes, whether any unit is available in the inventory? No, no unit is available. Raw material, what is the relevant cost? Firstly, we see if it is in inventory, not in inventory. Not in inventory, purchase price. It is in inventory, we see. Yes, is it regularly used? If it is a regularly used, it is a replacement cost. Not regularly used, we tell what is the realizable value or benefit from alternate use, whichever is higher. This is what we'll be telling. Firstly, we have book value. Book value is not relevant. It is historic, sunk cost. We'll scratch it off. Raw material A, 2000 units we want. Units is not there in inventory at all. So complete 2000 units we should buy. To buy, how much we are paying? Purchase price, replacement cost, 8 rupee per unit. So 2000 into 8 will be our relevant cost. Look at this. Raw material A, 2000 units we have to buy. Yes, no units are in stock. So complete 2000 units we have to purchase at the rate 8 per unit. 2000 into 8, it is 16,000 rupees is relevant. Is it clear, students? Raw material A to 16,000 is relevant. Now, we are moving into raw material B. Raw material B, look at this. 3,000 units we want. Total 3,000 units we want. In that, 1,200 units are already there. 1,200 units are already there. So, how much additional units we want? 3,000 units we want total. In that, 1,200 units are already there. So, how much additional units we want? 1,800 units additionally we want. Now, what is the question telling about raw material B? Raw material B is regularly used in the production. Yes, therefore, any stock towards this job order would need to be replaced. So, what is the question telling? Yes, it is regularly used. So, even if it is there in stock, you are buying, you need to replace it. Yes, the replacement cost is 10 rupees, which is given here. So, we will be telling firstly, 1,800 units are not in stock. If it is not in stock, we need to purchase. We'll purchase it at 10 rupees per unit. 1,800 into 10, 18,000 rupees is the relevant cost here. 1,200 units are already in stock. Even though they are in stock, they are regularly used, so we need to replace it. So for every unit, we'll have to again pay 10 rupees. So 1,200 units into 10, 12,000 will be relevant. So total 12 plus 18,000, 30,000 is a relevant cost for raw material. Clear, students? 30,000 is relevant for raw material. For raw material A, 16,000 is relevant. Now look at raw material C. What is question telling about raw material C? Yes, 2,000 units we want. 2,000 units we want for raw material C. 1,400 units are already available. So 600 additional units we should purchase. 600 units we will be purchasing at purchase price we will purchase. But for the 1,400 units which are already there, now look at this. Raw material C and raw material D are purchased from a stock that was purchased in excess previously. We had purchased it extra. It is not regularly used. So what we are planning? We are planning to sell it off as a scrap. Whether there is any alternate use, material C has no other use other than for this special order. So we are planning to sell it off. If we sell it off, scrap value will be getting 9 rupees per unit. So look at this. So we have raw material C. Yes, 2000 units is required total. In that 1400 units are already in stock. So balance 600 units I should purchase. 600 units, whatever is the units I am purchasing, I'll have to pay to the supplier the replacement cost of 14 rupees per unit. So 600 into 14 rupees is 8,400 students. But for the units which are in stock, what is the question telling? I had purchased it in excess previously and now there is no alternative use. So what is the relevant cost, students? What is the relevant cost in this case? What is the relevant cost, students? Tell me what is the relevant cost, everyone. It is the realizable value, yes or no? How much I will get if I sell it off to scrap? I'll be getting 9 rupees if I sell it off to scrap. So 1400 into 9, 12,600 is relevant here. I'll tell. So it is total 12,600 plus 8,400. 21,000 is the total relevant cost of raw materials. 21,000. Is it clear, students? Should we move to raw material D? Yes, okay. Now raw material D. Look at raw material D. 500 units we want. 500 units is already there in stock, so we need not purchase anything at all. Now, what is telling the question? What is the question telling about raw material D? Raw material D was purchased excessively previously. Yes or no? Raw material D was purchased excessively. That means, yes, it has no other use. It is not regularly used. But what is question telling is material D can be used as a substitute as for 700 units of raw material Z, which currently cost 11 rupees per unit. Okay. So what question is telling? Raw material D, 500 units we want, 500 units extra we have. Yes, it was not regularly used. So what all two options that we have? Either we sell it off to scrap dealer, for every unit we get the realizable value 12 per unit, or else alternatively, yes, we can use it instead of 700 unit of Z, for which we had to pay 11 rupees per unit. Which one we would have done? Whichever would give us more amount, yes or no? So we have two options. 500 units we want. Yes, 500 units are there in stock. If we would have sold it as a scrap, we would have got 500 rupees per unit into 12 per unit. Yes or no? This realizable value is 12 per unit. We would have got 6,000 rupees. If we use it as a replacement for Z, we could have used it as a replacement for 700 unit of Z, which to purchase that we had to incur 11 rupees. So 700 into 11, 7,700. So which is the relevant, students? We are telling, yes, raw material D extra we had. We have two options. Either sell it off to scrap, get 6,000, or use it as a raw material, Z, get 7,700. Which one we would have done? We would have done this one, or no? So this is relevant. It is realizable value or benefit from alternate use, whichever is higher. The relevant cost is 7,700. So what is the total relevant cost, students? 16 plus 30 plus 21% on 7. 74,700 is the total relevant cost. Again, question is telling book value of asset, that is the previous past purchase value, is sunk cost. So it is irrelevant. Okay, so I've explained everything, but while you are writing in the examination, every item, what is relevant, why it is relevant, why others are irrelevant. You need to write three things. What is relevant? Suppose raw material D, we are telling yes, it is not in, sorry, it is in stock and it is not regularly used. So relevant cost is realizable value or benefit from alternatives, whichever is higher. Realizable value, it is 500 unit into 12 per unit. Benefit from alternate use, 700 unit into 11 per unit, 7,700, whichever is higher. So the relevant cost for raw material D is 7,700. That is how presentation has to be done. Yes, SCMPE, students tell SCMPE is not scoring. SCMPE is scoring. You need to know how to present it. That's all. The relevant cost is 74,700. Let's look at the answer. Altogether, it is 74,700. Okay, everything individually they are telling. For raw material A, what is the relevant cost? Entire explanation is given. A, B, C, D. Complete paragraph is given. They've added everything. They've told the total relevant. Is it clear, students? Should we move to the next question? Okay, let's move to the next question. Test your knowledge question number 7, page 5.38. We have question number 7, page 5.38. Let us have a look at the question. Yes, what is required? Again, what is required? Firstly, recommend a minimum unit price. Minimum unit price is for 1 unit. How much is the price to be charged without any loss to the firm? Let us have a look at the question. Diesel is engaged in manufacturing of chemical products. Okay. The firm has in stock 10 units of non-moving toxic chemical. Yes, it is already having 10 units in stock. Yes, it is non-moving item. We are not using it presently, but we are having it in stock. Book value is given, realizable value is given, replacement value is given. Yes, so which is relevant, students? Yes, raw material is in stock and it is not regularly used. Which is relevant, students? In this case, what is the relevant cost? Tell me, students. Realizable value is relevant. Therefore, 3,500 is a relevant cost. Get this? Here 3,500 is a relevant cost. Next, what more is question trying to tell us? Customer is asking to supply 10 units. Okay, customer is asking to supply 10 units which needs all 10 units of non-moving chemical as an input. Now look at this. This 3,500 rupees is for 10 units. Yes or no? For 10 units of stock, the realizable value, the relevant cost is 3,500 rupees. What is the question asking? Question is asking, we want to calculate per unit. For 1 unit, how much is it? 3,500 is for 10 units. So for 1 unit will be 350. Clear? Yes. This is the non-moving toxic chemical. Next, what else is question telling us? Allocated overhead expenses 16 rupees. Allocated overhead, is it relevant? Is it irrelevant, students? Allocated overhead, tell me. Is it relevant? Is it irrelevant? Allocated overheads. Irrelevant. So allocated overheads is 16 rupees per unit. Relevant cost is 0. Next question is telling out of pocket expenses 50 rupees. Out of pocket cost, is it relevant? Is it irrelevant, students? Out of pocket cost is the additional cost we are incurring. It is relevant. So 50 rupees is relevant here. Now, what more is question telling us? Labor cost is 40 rupees per hour. For each unit, 2 hours are required. What is the question telling about the labor? Labor force is taken from the permanent employees and it will not lead to any loss of contribution. That means that there is a spare capacity. Spare capacity is there. Employees are lying idle. So what is the labor cost? What is the relevant cost, students? Whether labor cost is relevant? Tell me, students, whether labor cost is relevant here. Relevant cost is nil here. Yes. And next, what else do we have? Other material cost is 80 rupees. So other material cost 80 rupees. We'll take it as relevant. So the total relevant cost we have 350, 80 and 50. 480 rupees is the minimum unit price to be charged. Let us look at the answer. Yes, 480 rupees is the minimum unit price which has to be charged. Okay, so minimum unit price should be 480. Okay, yes, what is relevant, why it is relevant, what is not relevant, why it is not relevant, it is told. Analyze with the reason for inclusion or exclusion of each of the cost. Every item you need to tell if it is included, why it is included, how much is included, what is the reason. Okay, logic has to be told. And thirdly, advise a pricing policy to be followed in perfect competition. What is the pricing policy to be followed in case of perfect competition? Yes. Thirdly, yes, we have pricing policy in perfect competition. Pricing strategy, it is discussed in chapter number 6. Okay, pricing. Okay, so wherein we have told what is the perfect competition. What is the perfect competition? Is in perfect competition, what are the peculiar features? There will be large number of sellers. Too many people are selling the goods. Is what goods they're selling? They're selling the homogeneous product. Same product they're selling. And correct information is available about the market and price. So they cannot take any advantage of market inefficiency. Everybody is know, yes, how big is the market, how many units we are selling, what price we are selling. So in case of a perfect competition, yes, we'll be telling that we cannot accept any, we will not be having any pricing policy as such. Why will be not having any pricing policy? Because we cannot accept the price at all. Yes, market, whatever is a price which is set in the market, we just have to accept that price. We cannot set any price of our own. Yes, if we set a price, suppose everybody is selling item at 100 rupees. We are setting a selling price of 200 rupees. Whether anyone will buy? No, because large seller is there. Product is homogeneous, so they'll go there. So what we'll do, we are only the price takers. In case of perfect competition, we are only the price takers. We accept the price. What is the decision we take? Yes, if the selling price is more than the marginal cost, yes, suppose selling price is 100, our marginal cost is 80 rupees. We will continue, we'll keep selling the goods. But if selling price comes to less than the marginal cost, we will exit the market. We'll tell this is not feasible. That is the only decision we can take. The only decision we can take is whether to be in the market or not be in the market. We cannot set the selling price. So what we will be adopting is the going rate pricing. What is the going rate pricing? Yes, it is the average selling price which is charged in the market. This is what we'll be charging in case of perfect competition. What all we have told? Perfect competition. Yes, what is perfect competition? Large sellers will be there. They'll be selling homogeneous product. Correct information will be available. So we cannot have any pricing strategy of our own. We are just price takers. The only decision we can take is whether to continue selling or to exit the market. So what we'll be adopting is the going rate pricing. What is the average price which is charged in the market, and that price will be selling the goods. This is what is the question. Yes, look at this, students. Yes, part 1 is over. Part 2, every item we are telling. Advice on pricing policy. Yes, perfect competition have no pricing policy. They are price taker. Can only decide the quantity to sell and produce as long as marginal cost is recovered. If marginal cost exceeds, we will incur loss, so we will exit the market. So we will adopt going rate pricing. So it will help to attract a fair share of market. This is what is given, student. Is it clear? So we have one final question on relevant costing. Yes. Question number 9, page 5.39. Very beautiful question. Aditya Group. Test your knowledge. Question number 9, page 5.39. You look at the question itself runs to 4-5 pages. We'll show you the question. Here the question stats is running. This long the question is. Don't worry. Yes, the question is nothing. It's just chiller. Yes. So let's have a look at the question. Firstly, yes, if we read this question, to read this question only, it will take you half an hour. So what we'll do, we'll directly look at the analysis. I'll tell you the background, and whichever paragraph is relevant, we'll look at the relevant paragraph, we'll look at the question. What is required is we should calculate the minimum price. Simple. Background, what it is telling is, we are Aditya Group. We have two subsidiaries. One is AUS, which is dealing with luxury beauty care, and second is ANZ, which is dealing with daily beauty. This is about the company. And about organization structure. Yes, we are the assistant manager. Yes, question is asking us what is the minimum price. Okay. Yes, we are reporting to our manager. Our manager's name is Fiona, and the manager is reporting to the director of finance, whose name is Elsie. Yes, there is a new customer who has placed an offer. Okay, a new customer has come. He is telling, yes, I want this product. Now we have to prepare a quotation. So for quotation, we want what is the relevant cost. This is what the complete story is all about. So we have to calculate what is the relevant. Okay, we look at the respective paragraphs, calculate the relevant cost. End of the question. Very simple question. First, complete story, yes, about the company, about you, all these things is written. All this is not required. Let us directly go to here. You got an email from production manager. It is informed that 40 tons of raw material DX is required. Yes, to undertake the contract, 40 tons of raw material is required. What is question telling? It is in regular use. The raw material is in regular use and has a current purchase price of 380 rupees. Currently, there are 5 tons in inventory, which was purchased at 350 per ton. Yes, historic cost, some cost, we don't want. Resale value of inventory, we don't want because it is in regular use. What is the question telling? How much ton we want? Total 40 ton we want. Yes, this is in a regular use, 40 ton we want. In stock, we have 5 tons. So whatever is a 5 tons we have in stock, we need to replace them. The relevant cost will be the replacement cost. How much is the replacement cost, students? Replacement cost, purchase price, both are one and the same. It is 380 per ton. So 5 ton into 380 tons is 1900. And for the items which are not in stock, 35 tons balance which are not in stock, what we need to do? We need to purchase. So relevant cost is the purchase price. So it is 35 ton into 380 per ton is 13,300. So total relevant cost 13,300 plus 1,900 is 15,200 rupees. The total relevant cost. Clear? Yes, 15,200 the total cost. This is with respect to raw material DX. Now next, we also have our components. Yes, this is the second paragraph with respect to components. It is informed that 4,000 components is required. Okay, 4,000 components is required. Now what we can do with respect to components? Either it could be purchased externally for 15 rupees each. Either we can buy it from outside, pay 15 rupees, or alternatively, what we do, it could be supplied by ANZ Limited. We've already told Aditya, we have AUS ANZ. We have our sister concern ANZ. It can give us. If it is giving us variable cost, how much is the variable cost? 8 rupees per unit. And it has sufficient capacity to produce 2,500 components. Okay, yes, for 2,500 components, spare capacity is available. However, for extra 1,500 components, what it has to do, it has to forego external sales of 50,000, which has a PV ratio of 40%. Okay, to have uniformity in the quality of component, either complete 4,000 units we will buy externally, or complete 4,000 units we will buy from in-house. Yes, transfer pricing is set in a way that, yes, whatever is the opportunity cost, that will also be charged. Now look at this. Let us try to understand. 4,000 components we want. We have two options. Either buy it from outside or get it from ANZ. Which one will we choose? Wherever our cost is less, that is what we are going to choose. If we are buying from outside, per unit 15 we have to pay. So for 4,000 units into 15 per unit, how much we will be paying? 60,000 we pay. Now, if we are getting from ANZ Limited, yes, how much we are telling? Question is telling the variable cost is 8 rupees per unit. Yes or no? The variable cost is 8 rupees per unit. So for 4,000 units, how much will be the variable cost? 8 per unit into 4,000 units. 32,000 is the variable cost. But wait, what is happening? Yes, we are not having sufficient capacity. Total we want 4,000 units. In that, for 2,500 units, we have spare capacity. Employees are lying idle, will tell, yes, only 8 rupees is a variable cost, only 8 rupees is relevant. For balance 1,500 units, what we need to do? If we need to buy from ANZ, ANZ has to forego external sale of 50,000 rupees. Whatever is the sale it is making outside, that it has to forego. So we are telling, yes, for you, if you want the component, we'll have to sacrifice this external sale of 50,000. So if we sacrifice this sale, how much contribution we will be getting? 50,000 into 40 percentage, 20,000 contribution. Otherwise, we would have got that we are sacrificing because of you. So that also we will recover, telling this is our opportunity cost. So total cost is 52,000. Look at this. What ANZ Limited is telling. You want 4,000 units, we'll give you. What all cost I'm incurring? Yes, variable cost 8 rupees per unit. For 4,000 units, 32,000 is the variable cost I'm incurring, that you have to pay. Additionally, because I'm taking your order, here there is one 50,000 rupees order, which I'm cancelling. If I take this 50,000 order, I get a contribution of 20,000. This I'm sacrificing because of you. So this 20,000 also you should give me. So total you have to pay me 52,000. Which is beneficial for the company. Yes, what we are thinking, if we buy from outside, 60,000 we should pay. If you buy from ANZ, 52,000 we should pay. Which is beneficial, students? Buying from outside or buying from ANZ, which is beneficial? Yes, we'll buy it from ANZ. That is cheaper for us, yes or no? So we'll tell, yes, let us buy it from ANZ. The relevant cost is relevant cost is 52,000. Okay. Yes, the relevant cost is 52. This is with respect to the component. Is it clear, student? Yes. Do not go behind the formula. Keep the logic intact. We are purchasing. We want the cost to be minimum. Which is the minimum cost? That is what we will be choosing. Simple. Third. Next, what we want. Yes, it is informed that 2000 high skilled labor hours is required. 2000 hours of employee is required. The grade of employee is currently paid 5 rupees per hour. Currently, we are paying them 5 rupees per hour. The employee is in short supply and cannot be increased significantly. Employee is in short supply. Permanent employees, it is in short supply. So wages plus the opportunity cost is relevant. At present, what are they doing? They are at present producing product G, which requires 4 hours. Okay, and contribution by selling 1 unit is 24 rupees. So we are selling, yes. To take up this contract, 2000 labor hours is required. For labor, how much we are paying? We are paying them 5 rupees per hour. But wait, they are not sitting idle. They are doing something else. What are they doing? They are producing product G. So if they produce product G, they will get 24 rupees for 1 unit. And to produce 1 unit, they have to work for 4 hours. Effectively, for 1 hour, they are getting 6 rupees per hour. Yes or no? So we'll be telling, look at this, for labor. Yes, for labor, what is the relevant cost? It is the wages. Whatever is the wages we are paying, that is also relevant. Plus the opportunity cost is also relevant because the existing employees is in short supply. So firstly, we'll be telling, we want the employees for 2000 hours. And for 1 hour, we are paying them 5 rupees. So 2000 into 5, 10,000 rupees. Additionally, look at this. What is the opportunity cost? Question is telling presently they are producing product G. Is to produce 1 unit of product G, it takes 4 hours. So if we work for 4 hours, if our employees work for 4 hours, they get a contribution of 24 rupees. That is for 1 hour, they'll be getting a contribution of 24 divided by 4, 6 rupees per hour. So like this, they are sacrificing 2000 hours for us. 2000 hours into 6 per hour is the opportunity cost, 12,000. So total cost is 22,000. The relevant cost of labor is 22,000. Yes, next we want a specialist machine. Let us look at the specialist machine. Yes, here details about the machine is also given. Look at this. Okay, its contract would require a specialist machine. What is the details? Question is telling about specialist machine. Either the machine could be hired for 15,000. Option number 1, we get it on hire for 15,000. Or we can purchase it for 50,000. Second option is we purchase it for 50,000. If we purchase, what we do? At the end of the contract, if the machine is purchased, either you can sell it for 30,000. You buy it for 50,000, you sell it for 30,000. That cost is 20,000. So look at the question. Machine, we have 2 options. Either we get it on hire. Yes, if you are getting it on hire, the higher cost is 15,000. So relevant cost is 15,000. Or we purchase on our own. If we purchase, again we have 2 options. First option, what it is telling, yes, boss, you purchase. For purchase, you pay 50,000. Yes, at the end of it, you resell. If you resell, you will be getting 30,000. So what is the relevant cost? 20,000 is the relevant cost. What is another option? Or alternatively, what we can also do is it can be modified at a cost of 5,000. Yes, 50,000 anyways originally we have paid. Extra 5,000 we pay for modification and used on other contracts instead of buying other essential machine which would cost 40. Look at this. What question is telling is alternatively what you do is purchase now. Now you purchase. For purchase you pay 5,000 rupees. Sorry, 50,000 rupees. Yes, at the end of the contract, incur 5 more thousand rupees cost for modification. 5,000 more. So how much total we have paid at the time of purchase? 50,000, modification 55,000. Total 55,000 we would have paid. Yes, but by doing this, what will happen is we can save purchasing another machine. Okay, saving cost. Yes, which would have incurred 40,000 rupees. How much it would have incurred? 45,000, I guess. It would have incurred 45,000 rupees. If we do this, what will happen for us is essentially we can save incurring 45,000. So we will tell, yes, we have totally incurred 50 plus 5, 55,000. But if we incur this, yes, we are getting a 45,000 rupees benefit. Our net cost is 10,000. So yes, third option I'm telling, yes, what we are doing, we are purchasing at the time of purchase, we are paying 50,000 rupees. Again, for modification, we are paying 5,000 rupees. And if we incur total 55,000, we can save 45,000, which we would have otherwise incurred to purchase a fresh machine. So our net cost is only 10,000. So we have three options. Look at this, students. We have three options. We want our cost to be minimum, whichever is the cheapest alternative. Yes or no? We always have the business mind. Okay, whichever is the cheapest alternative. If we get it on hire, 15,000. If we buy and resell, 20,000. If we buy and use it for other contract, 10,000. Which one will do? Which one we will do, students? Which is the relevant cost? Tell me. Which one will we do? Yes, we'll purchase and use it for other contracts. Yes or no? So the decision is we will purchase. Yes, we'll purchase and we will use it for other contracts. So the relevant cost here is 10,000. The relevant cost of the machine here is 10,000. This is with respect to machine. Next, we have a supervisor. Look at what question is telling about supervisor. Yes, it is an existing manager. We have an existing supervisor. Okay. Yes, he has sufficient capacity to carry out supervision. He has sufficient idle time. So we are asking him, yes, do this work also, carry out this supervision also. But we are paying him because he is doing this extra work. We are giving him 5,000 rupees bonus. Because we are paying 5,000 rupees bonus, this 5,000 extra, whatever we are paying, will be relevant cost. So we'll tell 5,000 rupees is the relevant. Next, development time. Yes, 15 hours of development time at the cost of 30,000 has already been worked. It is incurred in the past. It is the sunk cost. Development cost is always irrelevant. Sunk cost, it is irrelevant. Next, we have fixed overhead absorption rate. Absorbed overheads, allocated overheads. It is the existing overhead cost. We are not incurring it specifically for this decision. So it is also irrelevant. What is the total relevant cost, students? Is 1,04,200 rupees. Is it 1,04,200 rupees? Calculate and tell me, students, what is the total relevant cost? Okay. The operating cost of the machine is payable by AUS, whether it hires or buys the machine. Yes, we purchase the machine. Machine purchasing, we had three options. Get it on rent. Yes, purchase and resell it. Yes, purchase it and use it for other contract. But to operate the machine, we have to incur some cost. Yes or no? We want fuel, other things and all. How much is the operating cost? It is 12,000 rupees. For this contract specifically, we have to incur 12,000. This 12,000 is always relevant. The total cost is 1,16,200 rupees. Okay, because we are doing it in a hurry. Yes, we are only looking at small. Quickly, we are looking at the question. Yes. There is a possibility few items may get missed out. That is why we are confirming it again. Is 1,16,200. Look at the answer. Such a lengthy answer it was. Yes, we have done everything. Total relevant cost is 1,16,000. Okay, for every item they've given explanation 1, 2, 3, 4, 5, 6, 7, 8. Yes, what it is relevant. If it is, how much is relevant, why it is relevant, what is not relevant. Every explanation is given. This is what is required. Now, yes, that was first thing. Yes, calculate the relevant cost. Second, discuss two problems that can arise if price are set using relevant costing. We have told two problems which are going to arise. What are the two problems, students? Firstly, profit reporting. Second, pricing of future work. Yes or no? Profit reporting, even though it is correct, but still, yes, our profit may not be showing. Firstly, we have profit reporting. Secondly, we have pricing of future work. For future work, if we have to quote a price, relevant cost need not be the same. This was question number 9. So we've discussed the concept. In today's session, what all we have done, we've discussed concept 1. Firstly, we've told the basics of marginal costing. Compare marginal revenue, marginal cost, take a decision. Next, we've told the basic formulas. Contribution, variable cost ratio, PV ratio, BP in terms of units, in terms of value. Margin of safety, sales to achieve desired profit or loss, differential formulas, everything we've discussed. Next, relevant costing technique we've looked at. Relevant costing technique, it is a cost which is relevant to take any decision. Yes, based on that, we've told, firstly, look at our class notes quickly. Let us summarize this. Yes, firstly, historic cost, sunk cost, committed cost, incurred in the past, irrelevant. Fixed cost, if it is allocated, irrelevant. Additional is relevant. Opportunity cost, always relevant. Out of pocket, it is additional cost, so it is relevant. Now, for material, if it is not in stock, we should purchase, so purchase price is relevant. If it is in stock, we ask, is it regularly used? If it is regularly used, we need to replace, so replacement cost is relevant. If it is not regularly used, we tell either it is the realizable value or benefit from alternate use, whichever is higher. Next, for labor, if it is the new employees, additional employees, wages paid will be relevant. But if it is existing employees, if we have spare capacity, it is irrelevant. But if ours is in shortage, then wages and opportunity cost is irrelevant. Thirdly, overheads. Variable overheads is always relevant. Fixed overheads. Allocated is irrelevant. Additional is irrelevant. And machine cost is rent or net cost of buying, whichever is lower. The issues we have is while we are reporting the profit and for pricing the future work. With this, we have finished the concept and looked at all questions of the study material from the concept relevant costing. Okay, so with this, we end this session. Thank you so much, students. Like the video, share it to all your friends, and let us together come here and revise. Focus to get really good marks in SCMP. As I've told you, it is about the mindset. SCMP is scary. No, it is not. SCMP is scoring. You need to look at it from that perspective and prepare from that perspective. Present properly, you can score really good marks. Thank you so much, students. See you today evening in the next part of the video.